Well, investment properties are the highest risk loans for lenders. I shouldn't say the highest risk, one of the higher risk loans. So what lenders have done is they put more money down. Because think about it, if you have a primary residence and you have an investment property, if you buy a primary residence, you can put as little as 0, 3%, 5% down when you buy it. On an investment property, if it's a single family home, you have to put at least 15% down. So they make you put a lot more down, a lot more skin in the game, as they say, because if something happens to you and you're not able to make your payments, you're most likely going to give up your investment property than before you give up your primary residence. So as a residential mortgage banker, we finance single family homes, duplexes, triplexes, quadruplexes. That's the 4 things that we finance. And the more units that you get, the bigger the down payment on an investment property. A single family home, 15% down. And then you start buying multi-units, as they call it, duplexes, triplexes, quadruplexes, 20%, 25% down, because they're just more risk to the bank. And the interest rate is much higher on an investment property. It's almost a point higher, I would say, typically, if you do pricing. If you can get 6% today on your primary residence, you're going to get 7% on an investment property. You may even have to pick some points on top of it. So if you really want to control your interest rate on an investment property, the best thing you can do is put more money down. The more money you put down, the better the rate. We had a guy that had done a loan for an investment property. His rate was 8%. His equity position is much, much improved. He has a 40% equity position. So we are able to offer him 6 3/8 on an investment property because his loan to value was under 60. So the more equity you have or the more money you put down, the better the rate. Direct correlation between the two. You don't have to then call your lender and be like, hey, I'm no longer living in this home. You just can't be committing fraud the day that you start off. You have to make sure that you're not lying. That fraud is the number one type of fraud in mortgage banking and in the mortgage business, because people know if they claim that they're going to be living in a home, the interest rate is better. The down payment is better. So people try to get over on you. Don't do that. You will get caught. There are a lot of ways that the agencies that we sell our loans to check on these things to see if you actually did move into the house. So don't commit occupancy fraud, please. But yeah, your intention has to be that the house is going to be your primary residence when you close. We're not the FBI. We're not like, all right, you have to stay in this house for 6 months. I mean, life happens. Things happen in your life. Things change. So you can go and you can move to a new home and buy another primary residence. The most important thing is your intention has to be that it's your primary residence when you close, if that's what you're saying that it's going to be.